I think Africa has so much opportunity. I think that the economic development story here is going to rival the best stories the world has ever seen. One sector I really like is real estate. Over the next 25 years, there's going to be 855 million people moving towards cities. That's more than twice the size of the United States. When you're thinking about like, what is the life I want to live, the impact I want to make, the legacy I want to leave, your capital plays a large role in that. Sometimes when we're focused on impact too much, we can lose the underlying economics behind it because we're just trying to hit this metric, as opposed to like, okay, what is the long-term thing that we need to do, and let's push the needle. So I think we need to realize as Christians that we have everything that we need. We just need to work together a lot more efficiently. And I think if the goal is to build the tallest building in the fastest amount of time, we shouldn't all start building our own buildings from the ground up, right? Like we work together, and the people that are great at laying a foundation, lay the foundation. People that are great at building the frame, build the frame. The people who are great at windows, do that. The people who are great at interior decorating, do that. And let's use our skills together for the advancement of His kingdom and for the good of other people.
Hello, everyone, and thank you for joining us today on an episode at the African Checkbook, where we illuminate stories, ideas, and opportunities of the African private capital markets. It is not always that you'll meet someone who has walked away from Wall Street and decided to backpack across Africa in search of faith-aligned investment opportunities, but today you will. He is young, his story is raw, and his journey is bold. He's very intentional, and I feel that he has Africa at heart. Thank you for joining us today, Zac.
Thanks for having me.
Karibu on the show.
Thank you so much. It's good to be here.
Thank you. Thank you for joining us. Really excited to have you today in our discussion. You could start by telling us about yourself, your background, and why you made this bold move to walk away from the coveted Wall Street.
Yeah. Well, my name's Zac. I'm 27. I spent the last 5 years trading bonds at Goldman Sachs. And have had a passion for advancing economic development around the world for the better part of a decade. I spent some time in college writing a thesis on the power of investing to alleviate poverty, understanding that it's through trade and innovation and investment that countries often go from poverty to self-sustainability. And so I've had a passion for that for a while, but spent some time on Wall Street where my job was essentially to connect capital with opportunities and to kind of play that middleman. And as I looked around the world, it just became clear that Africa was going to be the greatest investment opportunity of the next 2 to 3 decades. And so I think there's tremendous opportunity here, and I wanted to be involved. But I didn't want to jump in with solutions to problems that I don't understand and cultures that I don't understand. And so I really wanted to just spend a year listening. And so I'm about 3 months in 6 countries into this journey, but the goal is to travel across the continent, meeting with everyone from farmers to entrepreneurs to investors, fund managers, political leaders, business leaders, across sectors and across geographies to get a high-level overview of what's going on the continent, where the opportunities are, and to ask local people what their dreams and goals and visions are, and how they envision partnership with the West, if that's something that they want at all. But just taking a listening approach before jumping in, and then seeing how we can most effectively partner together.
Okay. So just still on that.
Yeah.
What was your aha moment? Like, it's Africa. I mean, at Goldman, you could have considered different geographies across the world, less riskier. I mean, more formal.
Yeah.
What was your Africa is the place moment for you?
Yeah.
And was this aligned to your faith?
Yeah.
Did it come from a Christian background, or from a Christian perspective of helping out, or what brought this conviction to come to Africa?
Yeah, no, it's a great question. It's 2 things. One is faith, and one is markets based. On the faith side of things, I feel like God had given me a passion for advancing economic development around the world from a young age, from different mission trips I had taken to Haiti and different parts of Central America. And I knew that was something I wanted to pursue at some point in my career. I didn't know what form it would take. But about a year ago, I felt like God started to put this desire back on my heart to do something more full-time in this realm. And so I took a weekend trip out to Jackson Hole, Wyoming, which is my favorite place in the United States, just a beautiful mountainous place, and just spent a weekend hiking and praying and just said, God, this is your time. Like, I think you're leading me here, but just kind of give me clarity. And so through that, I mean, there's so much he taught me, but helped me to just kind of release a lot of the worldly desires and idols that I had for money and for prestige and for the title next to my name, and kind of traded that out for impact, and kind of just gave me this desire to impact people's lives over some of the traditional, kind of desires that people have in life for money and things like that. So that was kind of the faith side of things to push me over the edge. And I, at the end of that weekend, had what I call my 20 takeaways from the Tetons, which are really just like, things like, my home is heaven, my future's secure. So like, if I have everything that I need, worldly risks aren't as risky as they might seem. Okay. Or God-sized dreams are going to be harder than you anticipate, more difficult than you might like, take longer than you want, but will be far more rewarding, and things like that. And so that really kind of got me over the edge. And at the end of it, I said, God, I don't know what the future looks like, but the answer is yes. And after that, doors just started opening and opening. Now, from a market standpoint, and why Africa, I believe that Africa will be the greatest investment opportunity of the next 2 to 3 decades. Mm-hmm. I think that, there's going to be a period of the next 5 to 10 years that's crucial to building infrastructure and kind of outlining the pipes of what investment can look like in partnership. But I think in 10, 15, 20, 30 years, I don't think there's going to be probably a better performing market in the world. Maybe outside the US, because I love my home country. But no, I think Africa has so much opportunity. I think that the economic development story here is going to rival the best stories the world has ever seen. Because I think the people are so amazing. I think the talent here is so high. The market opportunities, I mean, when you look at the macro environment, like, there are, in several countries, record political stability and economic opportunities with the signing of the African Continental Free Trade Area, which is the largest free trade area in the world, and the African Union's admittance into the G20. You have more trade opportunities open than ever before. And so when you look from a macro environment, from a talent perspective, the opportunities, are really, really off the charts. And so, and then you look at the demographics and the fastest growing population, the second fastest growing GDP. Technology is allowing us to solve problems we never thought possible in timeframes never imaginable. You've got, certain shifts in the capital markets, which really, when I was at Goldman, helped to kind of push me over the edge, because the two biggest shifts that I see in the capital markets today that'll be over the next 10 years in developed and developing markets is, one, the democratization of the private markets. Traditionally, private markets have been very hard to get into, but that's starting to change. And I think in 10 years, it's going to be almost as easy to buy private equity as it is to buy a stock on Robinhood. Yeah. And so when you bring that in with the second thing, which is, the ability of blockchain and stablecoin to create a borderless digital transaction world, it's huge. And then, why now for Africa? Like, valuations are never going to be better, right? And so there's tons of investment upside. So it was a combination of faith and, the compelling market opportunity.
Gosh, you're such an ambassador for Africa. Probably doing it better than some Africans could. But I like that. I like the opportunities that you see. And what was your experience? Is this your first time in Africa? First of all, what were your expectations?
Yeah.
I mean, this is what Africa is marketed as in your country, in the US, and what investors see Africa as.
Yeah.
And that, of course, now guides expectations. Yeah. So what were your expectations before you got here?
Yeah. So I'm 3 months and 6 countries into this journey. I've been to Kenya, Uganda, Rwanda, Nigeria, Zimbabwe, and Zambia. The goal is to go to, 10 or 15 plus countries over the course of the year. This is my 4th trip over to Africa. And I think my first big realization was that the perceived risk is very different than the actual risk, which was a big aha moment for me. And this happened within, the first few days of landing in Rwanda on my first trip. But like when you're on Wall Street, the core thing that people are looking for is, where is there a significant dislocation between the perceived risk and the actual risk? So to give you an example, I was trading regional banks during the regional banking crisis when Silicon Valley Bank went under and Credit Suisse had all their problems. And when Silicon Valley Bank went under, there was a large run on regional banks. And so regional banks sold off significantly. The stock sold off significantly. The bonds sold off significantly. And Charles Schwab, which is one of the highest rated banks in the United States, had their stock sell off 42%, if I remember right.
Yeah.
And so the reason it sold off was because people perceived a super high risk. But the people who looked at the numbers on the balance sheet and, beneath the balance sheet on the 10K and things like that, knew that the risk wasn't actually here. And so they bought in here and they rode it back up and made a ton of money. And so as an investor, that's what you're looking for. It's like, where's the perceived risk higher than the actual risk? And I think there may be no place in the world where that dislocation is as great as it is in Africa. And so I think that what Western investors don't quite understand about Africa is that like a lot of the risks that we perceive are not reality in a lot of the countries. I think that we've done a disservice to ourselves and to Africans by lumping Africa together as one country when it's really a continent of 54 countries, right? And so there are places where those perceived risks are true, right? Where there's property rights aren't great, IP rights aren't great, corruption is big, you can't trust your money in banks. Like there are countries where that happens, but that is not across the continent.
Yeah.
At the same time, because there's a perception that that's across the continent, the risk premium has become so high, which essentially is great for valuations for an investor, right? Because the perceived risk here, the actual risk is here, so the valuations are lower, you can get in, and it's, a tremendous opportunity.
Okay. And so then once you got here and you realized that the perceived risk and the actual risk is different, then what sectors, or could you say what opportunities have you identified so far? Briefly, like in your brief 3 months, what could you say with interaction with entrepreneurs and locals, what opportunities have you spotted that maybe are not anywhere else in the world?
Yeah, I mean, one sector I really like is real estate. So when you think about it, in 1971, 20% of China's population lived in urban areas. Today, that's 60%. In 1971, 18% of Africa's population lived in urban areas. Today, that number is 43%. When you look at that 17% gap, if Africa moves in the trajectory that China has moved, when you account for population growth, over the next 25 years, there's going to be 855 million people moving towards cities. That's more than twice the size of the United States, really 2.5 size the United States. If I'm wrong by 90%, it's still a market size of almost 100 million people, right? We're not building more land. We're going to have to go up, right? And so I think multifamily unit quality but affordable housing is a tremendous opportunity. I love doing that in a rent-to-own model where you're essentially like providing local people a way to build wealth in terms of home equity. Without extending mortgages, because it's hard to extend mortgages when treasury rates are so high, right? And so I love that model. Agro-processing is another thing that I really, really like. Obviously, agriculture, in some countries, as much as 70% of the population works in agriculture. Smallholder farmers, it's amazing. Africa is like the breadbasket of the world. It could be the breadbasket of the world. But it's going to take a few things. One is like optimizing yields. And 2 is like bringing the supply chain closer to farmers. And so that's one of the things I loved about what Talenton does is some of the portfolio companies they invest in help to take all these smallholder farmers, aggregate the products together, and then export that. And I think that's really important because when you look at countries coming out of poverty, it's not just through job creation. Like job creation that only serves the local market really is great, but it just recycles the same capital around. But when you can add value, keep more of the value chain in the continent as opposed to just exporting the raw materials, when you add value to it by processing it, keep more of the value chain in the continent, and then exporting, what you really do is net exporting products and services, net importing hard dollars, which raises the tide for everybody and stabilizes the currency.
Okay.
You see this with Ghana. Over the last few days, it came out, Ghana's currency is the best performing currency in the world, up 53% versus the US dollar this year because of coffee exports, because people are selling US dollars to buy, Ghanaian currency because they need to, exchange US dollars for that, for coffee. And so it's just, exporting is so, so important. So love agro processing. Those are probably two of the big ones. Obviously, there's a lot in tech and financial services that are huge. I think there's a lot of infrastructure type things that are really interesting, but those are some of the things I like a lot right now.
Okay. I love that you mentioned those sectors and as the top sectors that people could consider. And so now moving to faith-aligned investing. You're a Christian, and I know you're in. You have friends and you're in faith-aligned investing circles. So what is happening there? Is it a new concept with US Christian investors? And what are they looking for when they want to move that capital here?
Yeah, it's a great question. I mean, there's been a movement over the last decade or so to align your investments with your faith.
Yeah.
Right. There's a movement called the Faith-Driven Investor Movement, which is really inspiring, empowering, and equipping Christians to invest in a way that aligns with their faith to make an impact in the world. Right. And so you've got some of that negative screening where it's like, we don't want to fund companies involved in gambling and stuff like that. But then there's also a way of investing that really makes the positive difference in the world that you want to see, right? And I think what we understand as Christians is that every aspect of our life matters and impacts people's lives, right? And capital is just an extension of your legacy. And so when you're thinking about like, what is the life I want to live, the impact I want to make, the legacy I want to leave, your capital plays a large role in that, right? And I think there's a lot of people in the past who have piled up a lot of wealth to transfer down for generations or say, I'll give it when I'm dead. But like, we're in a war now. And like, we got to use our ammo, right? And trust that God will provide the bullets for the future wars. Like, but we're in a war now and it's time to use our wealth and our capital to really solve some of the world's greatest problems. And I think the beautiful thing about Christians is there has never been a group in the history of the world that is more equipped to solve the world's greatest problems than Christians today. Like, we have more people than any group in the world. We have more volunteer force than any group in the world. We have more capital than anyone in the world. Up until 50, 60 years ago, plane travel wasn't as common as it is today. Up until 25 years ago, we didn't have the internet. Up until 15 years ago, we weren't connected on our smartphones like we are today. And up until a year or two ago, we didn't have AI that helps us to solve problems we never thought imaginable in timeframes never possible before. And so I think like we are the best equipped body right now to solve some of these problems. And so, you know, my encouragement to those investors is to, man, get your capital in the game to solving these problems. And it doesn't just have to be through donations. Like, you can invest in these things, right? When you're talking about human trafficking in the US, like, you can invest in companies that are creating technologies that are helping to solve human trafficking, right? And combat that. And when it comes to Africa, like, investment capital is hugely important, right? And I sat down with an entrepreneur who is Kenyan, but she was in Rwanda, and we had lunch, and I said, what type of capital do you prefer? Like, for your business, do you prefer grants? Do you prefer concessionary? Do you prefer market rate? And she said, I prefer market rate for a few reasons. The first is that it shows me that you believe in me just as much as you believe in a US entrepreneur, and that instills dignity and pride in me. Two is it instills a sense of urgency. If I know that I got to compete at the highest level, I'm going to bust my tail to do that. And then three, while the cost of capital might be a little bit higher for me now, it paves the way for people behind me. And so I love that heart. But I think the last thing I would say on that is this idea of the law of diffused innovation, which the law of diffused innovation essentially says that in any population, the first 2.5% of that population are your innovators, next 13.5% are your early adopters. And then you've got your early majority, your late majority, and your laggards. And what it says is to get mass market adoption, you need between 15 and 18% market share, which means you need the innovators and the early adopters to go first. You saw this with the iPhone, right? The innovators were the people who stayed outside all night to get the first gen iPhone. The early adopters were the first ones after that to get it. And then once you reach a tipping point, everyone's like, oh, I got to have this. When you look at investing in Africa, it's the faith-driven investors that need to pave the way. We need to be the innovators and the early adopters that go first and say, hey, we can make a huge impact here. And you can also make money. And I think it's really important that we prove the ability to make money because that's what's going to attract more capital, right? A lot of that Wall Street capital is not going to prove the way. Like I've worked with them. A lot of people want to jump on the bandwagon that's going to make them money now, right? But when you have people who are willing to chart the path and go the way, it leads the way for everybody else to do that. And so I think one of the best ways that we can make an impact in Africa is proving that you can make money here.
Okay.
Yeah.
Okay. So there's some 3 points that you've highlighted when answering that question. And first, I would like us to talk about the donations and the charitable foundations that have been in existence for long. And with grant money and with Donald Trump cutting funding for some of that, we are seeing a shift even in foundations where they say they're cutting back on some of that donor funding. And expressing a desire for companies to target, to have a little return. It does not have to match market rate or a little return. And so what do you think that then will mean for investment coming here?
Yeah.
Because some sectors say like health were really dependent on donor funding, but now they have to prove concept and have a working business model. But from an investor's perspective, what do you think that will mean for capital?
Well, I think the first thing that I would say is the U.S. pulling back funding from a government level is really an opportunity for faith-driven capital and faith Christians, whether it's donor capital or investment capital, to fill the gap, right? Like when there's a gap, we need to be the ones to run and fill that. As far as like how that works together, I think that we really need to think strategically about how we can use blended finance, which is like philanthropy and investment capital not competing against each other, but collaborating with each other, right? And so one of the things that I have heard repeatedly from entrepreneurs here in Africa is we need patient capital. And I was a little bit confused by that and trying to understand what it meant. And after having a ton of conversations over several weeks, what it came down to is oftentimes a lack of infrastructure. And what people said to me is they're like, look, if in the US, you can get a return in 5 to 7 years, in Africa, we might need 7 to 12 or even 15 at times. And the reason is because the infrastructure that you already build your companies on, we need to build, right? And so someone told me, they're like, look, if you want to build Amazon in the US, you start by building Amazon. If I want to build Amazon here, I got to first start by addressing all of the places that don't have addresses. Then I have to launch a UPS service to deliver the packages. And then I can do Amazon. And those first things are really, really capital intensive. And you don't make a huge return on that initially. And so the way that we can really come together is using donor capital and DFI capital to essentially partner with investment capital and build the roads that investment capital drives on, if you will, right? And so when donor capital comes in, helps to build up some of that infrastructure, investment capital comes in as the next stage of partnership, and we go from there. And so I think that, there's, with foundations looking to get a little bit of a return and things like that, we got to be more strategic than we have been in terms of how we allocate and think about capital, right? And like from a hospital and healthcare perspective, I think that, there is a role for donor capital to play, but we can't sit here and I'm not a big fan of business models that rely on other people's generosity to continue in perpetuity, right? And I think that as an investor, I'm always looking for like, where is my out, right? If I make an investment, where's my exit? And I think as donors, we have to be thinking about that too. Like, not necessarily where's my exit from a financial return perspective, but knowing this company is going to need capital in the future. Where is the best place for that to come from? Because I can catalyze this thing and I can initially launch it. But then who are the people that should come in after that? And if you have a business where you can make money, then maybe the capital comes from, debt capital that comes in at 8% or whatever it is, right? And so you identify that, you make the infusion, in 5 years, they're going to need capital. We've already lined up people who are interested in those 5 years. We'll check back in, get more capital. And then you just kind of go from there. And so I think that there's just an opportunity to use blended finance. There's an opportunity to be more creative in the way that we structure these things and to think about like, who are the follow-on capital providers when I think that I want to exit? Because one of the ways that donors can hurt people is by making a company or organization dependent on their capital and then withdrawing it without a plan for them to get more capital, right? It leaves a bigger hole, creates a bigger issue. So
yeah, that's true. And so speaking of returns and impact, is it possible, like from your understanding and from your interactions, is it possible to achieve both at the same time?
100%.
And on impact, exactly as an investor, how do you measure impact, or what is impact to you? Because the stories have been many for so long, but quantifiable impact, what does it look like to you?
I mean, like every investment has an impact, whether we like it or not. It's just, what is that impact and how big is it, right? And so when I look at investing in Africa, I'm not so much looking like at what the specific impact metrics are, as I'm looking at holistically as a continent or a country, what is needed to do to bring people from poverty to self-sustainability. Or when I look at it, like, what's a good goal? Okay, maybe a good goal is for Africa in 25 years to have the same GDP per capita or GNI per capita, gross national income per capita, as China has today. Okay, so what needs to happen to get there? We need a 4x GNI per capita. Okay, how do we do that? Processing, adding more of the value chain here, exporting more things, all of those. So looking at like, what's the end goal that we're trying to get to? What are the inputs that we need to do to get there? And then let's invest in those. And when you invest in people and do it in a way with so much love and encouragement, and you're empowering people to be everything that God made them to be, moving towards this goal, you inherently have a huge impact, right? And so I think that sometimes when we're focused on impact too much, we can lose like the underlying economics behind it, because we're just trying to hit this metric as opposed to like, okay, what is the long-term thing that we need to do, and let's push the needle towards that. So I don't know if that makes sense, but like in Africa, the beautiful thing about Africa is like basic businesses make extraordinary investments and have extraordinary impact. When you think about like launching a grocery store chain, right? Like bringing food, bringing the supply chain, helping farmers have an outlet for what they're growing, and bringing food into communities that previously didn't have grocers, diversified diets, provide jobs, provides, incredible high quality food, provides outlets for farmers. There's, so many things like that, where in the US, it's like, okay, it's another grocery store. But like, no, it makes a huge impact. And so I think that like basic businesses naturally make extraordinary impact here.
And so still on the same line, because from conversations around, you can tell that investors right now want quantifiable impact. And so what gaps are there in reporting in terms of the numbers, or in terms of measuring this impact, and what can be done better by funds for them to present, like a case to investors, like if this is the number of jobs, if it's jobs that they're looking for, or these are the lives that have been changed. What are some of the stories that you've come across that you'd say this is quantifiable impact?
Yeah, I mean So much. And I think when we're thinking about quantifiable impact, I think that we need to think a little bit more long-term than we often do. I think that, the long-term goal, I think, is to help build an Africa where people are absolutely flourishing spiritually and mentally and physically, because the church, business, and government provide everything that they need to be everything that God created them to be. I think that's like long-term, what are we shooting for? And so I think that, we need to make sure our efforts are focused on that end. I think in the West, we need to lose a little bit of our ego around like, I just want to feel good about making X, Y, or Z, right? Like when people have like metrics of I need to feed X billion people or X amount of people, right? It's like, okay, is that actually helping people long term, or like is that metric more about people or more about you? And I think that sometimes in the West, like we need to think about that. Like if we couldn't make a sappy video about what we're doing, and if no one knew what we were doing, would we still do it? And is it in the best interest of the people?
Okay, so I know you're an investor here. You've invested in a fund at Talenton. And what led you to first of all invest? And how did you choose what fund to trust with your money?
Yeah, it's a great question. And there are tons of funds here now doing incredible things across the continent. And so, if you want to get into early stage venture capital for tech, there's funds for that. If you want to be in, infrastructure, there's funds for that. If you want to be in agro-processing, there's funds for that. And if there's certain geographies, there's funds for that. And if you want just a fund of funds, which is like an easy entry point to then invest in a bunch of different funds and have diversified exposure, kind of like an ETF, there are options for that too. For me, I think that and I think that this is a good path for people who want to get their feet wet in Africa and who are nervous about, they see and hear about the opportunities, but they're a little nervous to put capital there. So start with a donor advised fund, because that's how I started, right? And it's like a donor advised fund. In the US, you take your money, you put it in the donor advised fund, you get the tax deduction immediately. Donor advised fund can then be invested in anything from stocks, bonds, real estates, or it can be invested in private equity in Africa. And so that money will grow. I can never take it back for myself, but I can redeploy it into other areas, and I can, give it to whatever if I want after that. But so what I did is I took a portion of capital to get my feet wet that I was fine just donating, right? So I wasn't expecting to use this for myself.
About it.
Exactly. But then it was like, let me just test the waters with this. So let's use capital that I'm not depending on to feed my family, right? Let's just use this capital and let's invest it. And it's done really well. And the impact has been amazing. And so that gave me more confidence to do a follow-on investment and then to see more opportunities and stuff like that. And so, I think that there are people who have lost money in Africa and that happens, but there are also people who've lost money in the US, right? And what I would encourage people to say is when we lose money on an investment in America, we don't say America's broken. We say, that investment didn't work, right? Or that wasn't the right entrepreneur, or something happened that made that company not work out. But in Africa, a lot of people are like, oh, I lost money in Africa. Africa's broken.
Right.
It's or your investment wasn't right, or you didn't pick the right horse, right? Or you didn't so I think that, we need to have a little bit more of resilience with that. There are people who've done really well investing in Africa. But I think that start with maybe capital that you don't mind donating, and it has an incredible impact. And then if you take your money out in 5-10 years, you can donate that then if you want, right? But so that's how I got in. Why Talenton specifically? I mean, I just love their heart around empowering local people, job creation, but more than job creation with agro-processing and exports and things like that, because I think that that's really needed to raise the tide for everybody. We already talked about that. But when you net export products and services, you net import hard dollars, which raises the tide for everybody, raises the standard of living, and stabilizes the currency, which is really, really important.
Okay. And so what you're saying is for the hesitant investor, if I start with some sort of money they would like to donate just to test the waters and feel how they and see the impact that the capital has.
Yeah.
And so being an investor, how has that helped you tell Africa stories, or how has that changed your perspective when you're talking to someone about investing in Africa?
Yeah.
By being an investor yourself, how is it different from if you were talking from your desk on Wall Street? Yeah.
Well, you have skin in the game, and like you also then have a reason to come over here, more of a reason, right? And so like what I also encourage people to do is like you make an investment, or before you make an investment, come over and see the opportunities, because in the US we have a very small lens with which we see the continent. Yeah. When you come over, your mind's just blown. And I was talking to a fund manager several weeks ago. He's like, I'm batting 1,000 in terms of people either investing their first capital in Africa or investing follow-on capital in Africa once they come over. When I bring them on a trip, when they're in the US, they might be hesitant. When I bring them over here to see what we're doing and to see the opportunities, they're like, oh my gosh, I didn't realize the amount of opportunities. There's the fastest growing population in the world, the second fastest growing GDP in the world. I mean, you've got so much opportunity. And so I think that like, I'd encourage people like, you could start with capital that you're fine donating, but then like, come see what's going on. And I think that you'll be really, really amazed.
So this capital, is it in millions? Like, do you need millions to invest in Africa?
No. It depends. Like certain funds have certain minimums, right? And some of the big funds maybe have $1 million minimum. Others might have 500K, 250K. When you're using a donor advised fund, the minimums drop a lot. So sometimes with as little as 25K, you can invest in places here. There's also like, if you're an accredited investor in the United States, there's ways that you can invest with as little as $50 or $100. There's a company in Nigeria called Get Equity that's really interesting, in which it's essentially Robinhood for private equity investing. You can just put $100 into the app, and then they've got private deals that come up all the time, typically commercial paper type, but commercial paper. So like, let's just say 6 month to 9 month maturities, yielding 25%. So you can just put $100 in. After 9 months, you get $125 back. You know, and so like you can play around with smaller amounts of money. On the private side, sometimes you do have to be an accredited investor and things like that. But yeah.